Hello and happy new year, everyone. This is an analysis looking at what's up with Bitcoin. It seems that Bitcoin might be making an early move, a very early and unconfirmed move. But for those that have a risk appetite and are seeking the higher reward versus risk, it's an interesting spot. Uh, we do have the EMA 20 on the daily time frame at 16773. That is very close. I would love to see for the Bitcoin bulls a daily candle close above it, which would still not be enough yet, but it will be a start. To proceed that, we would like two consecutive bull candles above that EMA. But where we really want to go above, see, we have this from this, we've got this resistance, this red resistance, one and second touch point, and we possibly will be making a third touch point and test. Now we have this range from the high of 5th of November all the way down to this area over here on the 9th and the 21st. So this level is about 15,500, and the one at the top is about 21,500. And the middle of the range is about 18,225. This is where, for example, see this on the first leg up, sellers did not think or were not interested, or there was more selling pressure than buying pressure, but the sellers want to get a maximum local price, right, for their sell. So a lot of times you see this in technical analysis where the mid range becomes a point of decision, and here they decided to sell. What we want to see is we want to see a daily candle, because we are again on the daily time frame, close above this mid range. Okay, so above 18,225 would be another point for the bulls. Now we are coming also to a double resistance, because if, for example, we will be going above that mid range, that 18,225, and also later, depends where it happens on the x axis, on the time axis, we will also be going above this red diagonal line. Then that's a double resistance that price will be surpassing, and that's a great sign for the bulls. That should be about, definitely above 19,000. So do expect that if a daily candle closes above 19,000, then that is a very good sign for the bulls. Now, it doesn't mean that you're going to have to, or you can enter exactly there, because a lot of times when it breaks up from this, if it does, from that red diagonal resistance, it goes down to a retest, and you can catch a retest. Now, for those that are looking for a bit more advanced, and as mentioned, a higher reward versus risk, I will take that we have also a range here. Okay, this range defined by this top. Okay, looking at this range and these bottoms. So I'm gonna go and put a volume profile on the bars that are included in that range. And we have this red line, which is the POC. This is a good sign, because once price goes above it, and it has not yet, but it is getting there very soon, and that is very close to our EMA, pretty much the same. So when the price goes, let's say, closes, a daily candle closes, I keep on saying that because we don't want to be faked out. By having a daily close, we have more agreement within market participants. So we want to close a daily candle above the levels that I'm talking about. In this case, I'm even taking more spare, and let's put it at 17,000. Okay, so above 17,000, it means that the price has also surpassed, crossed up the point of control of the market profile or volume profile that I just mentioned. Those are two names for the same thing. Looking at where the most popular price, where most of the action, most of the selling and buying among market participants has taken place. Okay, that again is at about 16,786, and we took even a spare with the 17,000. Now one can say, okay, you know what? I'm gonna go now for a long because I like what I'm seeing here, and I like my style is this is usually not the majority of the people. Majority of the people would like higher confirmations, but some may say, okay, I've entered already, or I'm entering now. Let's say, okay, let's look at that entry. This is my entry from before, but to be fair to the ones looking at it now, let's put it at 16,710. Okay, and I'm putting my low below these lows, well below. So I'm going to risk 3.48%. I can do that. This is also for a possible buy and hold and not a leverage trade. With leverage trades, you probably need to do it much less or to uh, limit your position size accordingly. And this blue line is the value area high of the market profile that I mentioned before. So we would be going for a 23% increase. This is a 6.63 reward versus risk, which is quite high. You can also take half of the long if and when it's profitable at that mid range that we mentioned before. That would be aiming for a 9.16%. And that is still an attractive 2.63 reward versus risk ratio. So we might be at the low level of the range. There might be some accumulation here. Uh, for those that want to buy with a higher probability but lower reward versus risk, they need to look at crossing the diagonal line as mentioned, and also crossing this med level here. So crossing up 18 to 25, and also looking again at that diagonal line. Those that are looking to buy with a lower probability to win but a higher reward versus risk can go for a trade as mentioned just now. It seems that Bitcoin also with the Nasdaq and the E-mini ES are also recently been going up on the back of the unemployment, and we might also kickstart a new year. There might be some sharks that want to pump Bitcoin to mark a new sentiment and the end of the terrible 2022. That's not technical. That's just something to also keep in mind. For the technical, we have price talks and price matters, and I mentioned the exact prices where you can look at. And of course, on the bearish side, we have below a daily close below 15,500 would open possibly a new level for the bears. So do watch 15,500 on that side. Do return to Forex Live for additional perspectives. This has been an analysis of what's up with Bitcoin, and trade crypto at your own risk. Thank you.